Hello, my name is David, and I'm here on behalf of the Rise and Fall Trading Hub. As promised, I am back with part 3 of 18. We're saying this is a course for the Rise and Fall Trading in Deriv, and we've dealt with part 1 and part 2. If you have not watched part 1 and part 2, go ahead and click the links in the description and watch that. Now in part 2 we dealt with a few things. We started our basic analysis using the trending view, and we looked at some indicators, that is the Williams fractals, moving average, stochastic RSI, and we also spoke about some other stuff, so you can go ahead and watch that. Now we said we want to be building this part by part, so today we continue with part 3. Now in this part 3 we are going to discuss other things. So first of all, in part 2 we talked about trending view. So, and if you did not watch that, we can go to the browser and you type trending view Deriv, then you click on the first link, and this takes you to this default page. Looks like this. Now we also said that when you are in this part, now you can change the volatilities. You can change it here. This is basically where we do the analysis for the rise and fall. This is one of the platforms that are used in analyzing the markets. You can use it to analyze other markets, but for now we want to concentrate on the rise and fall. As we continue in the other parts, I will be showing you other platforms that are used, especially for the purposes of being sure that your analysis is okay, or confirming your analysis. Now, so we said you earned indicators at this point. We earned stochastic RSI. We also earned the Williams fractals, and then we earned what? Moving average. So basically that's what we did last time, and we said a few things about these indicators. Now the first thing we said as touching the stochastic RSI is that for this indicator we take trends at the turning points. So it has 2 lines. It has 3 parts: the overbought area, that is the upper part; the oversold area is the lower part; and the ocean, there is a bluish part, is the ocean. So when you want to take your trends, I don't know whether I mentioned this in part 2, but when you want to take trends in the stochastic RSI, you look at those points where the 2 lines, the 2 lines of the stochastic RSI have met, they have crossed, and they have started separating. So when they separate, you look at the trend that they are taking. For instance, if you look at an area like say an area like this one, this region, they have crossed and they have separated, and this you can see, in fact, at this point the market is very strong, because we said the steeper they are, the stronger the momentum of the market, the stronger the market. So this one was a rise market. In fact, if you look at this region, if you are to include like this part, if you look at this part, you realize that the stochastic RSI lines have crossed, they have separated, moving upwards, Then if you look at this point, the Williams fractals have formed, and so this one is an indication that this market is changing to a rise. So this one would have been a good place to enter a rise. Now we also said that if in case you want to place a fall, you look at those regions where the stochastic RSI have crossed, moving downwards. So a good example would be a region like this is a region that's not very nice. So there are a few other things. Oh, let me change the time frame to 2 minutes so that you can see this clearly. So look at an area like this one. An area like this one. This would be a good entry point for a fall market. So stochastic RSI, you look at the points where they have crossed. We concentrate on trending at the turning points, and then we said when you get to those areas where the stochastic RSI is forming some funny stuff inside the ocean, like this region, we said that you try and avoid trending at that point, inside the ocean, where you may not tell the actual trend of the market. Trend where there is a clear trend, when you can see clearly what is happening in the market. Remember, we said in the rise and fall, you trend based on what you see, not what you think will happen. Now this we discussed in part 2, and if I did not mention that, then at least I have mentioned that. Then for the moving average, we said the steeper the line, the more the momentum of the market. So you want now to trend in those regions where the moving average is very steep, and avoid areas where the moving average looks like it's flat. Actually, if you look at this region, it's the same region that has a problem here. So avoid trading in such areas where the moving average is almost forming an horizontal line. These this shows a ranging market, and if you look at this region, you realize that there are so many wicks. I'll be talking about wicks later, but avoid such regions. Concentrate on trading in those areas where the moving average is somehow steep. Look at a region like this. It's very steep here. So, and because it's steep here, this one could give you a good market, a good entry point for a rise market, because the moving average is steep. That is something else that you need to look at. Then concerning the Williams fractals, we said when the red one appears at the bottom, of course the red one will always appear at the bottom part, it shows that there is a change in character. In other words, the market is changing from a fall to a rise. For instance, in this region, it's forming here because there was a change of market from a fall to a rise. Then green one shows that the market is changing to a fall. So as this one continues to form, the Williams fractals are expected to form here. The red one will form here again, showing that this market is now rising. So that means the Williams fractals is basically used to confirm that the market has really changed. And we said be careful with it, because sometimes it may form and then disappear. So be careful with that. And then for the stochastic RSI, we also said sometimes it may take time for it to respond. So the market may have changed, and then it has not yet responded. It's a bit like another indicator that I want us to look at today. Now something else I did not mention, and before I get to that, we said for this timer, we make sure that there is a timer here, and if you don't know where to set that up, you come to this point where I'm pointing and you click on it, and you enable this, you tick this. So right now I've disabled it. So if I want the timer to come back, it's you click on countdown to back rows and your timer will appear there. Now something I did not mention, in case you are using one device like maybe a phone, you realize that immediately you get let's say you get a market here, a good one, and you want to trend, you go to your bot. Let me first of all make sure that there is a bot here. So you go to your bot, and as you analyze the market, make sure that at least you have a bot that is ready, so that immediately you see the market, you see an entry point, you just run the bot. In part, this is part 3. In part I think 4 or 5, I will be talking about entry points. I'll talk about 2. So you might want to subscribe for that. So so when you are using your phone and you identify maybe a market you want to trend, you come back to your bot, you realize that, especially if you are using a phone, you realize that as you come back, everything has been reset to the default page. So the indicators have even disappeared. So to avoid that, especially if you only have your phone, you can save this. And how you save that is, you come to where it is written save, click on that, click save, and give it a name. Like this was part 2. Now you have saved that, so that even if this resets like that, you see now it has taken you back to the original setup. You will come to where it is written save, click on this arrow, then load chart layout, and then you click on the name. Click on the name of that what you saved. I'm not sure which one I have saved. V25, yes, this one. You click on that, and you see automatically what you had done reappears. So you don't have to start from scratch, setting up again from scratch. So that's how you save, so that you don't have to start from scratch every time. Now I want us to include another indicator today. I want us to include an indicator that is called moving average convergence or divergence, commonly known as MACD. That indicator, you see, a MACD has 2 lines, and it has kind of histograms. Some are red, others are green, and others are faded. Now, so once you have your MACD here, you know all these indicators are used in analyzing the market. So for MACD, how do we use it? MACD, we use it in getting an entry point. It can help you to get an entry point. So when you want to use MACD, assuming that there is no other indicators that you are using, you look for that point where the 2 lines of the MACD have crossed and they have started separating. Now it's just like for the stochastic RSI. Make sure that they have crossed and they have started separating. For example, an area like this, they have crossed and they have started separating, and they are showing you the clear direction. Otherwise, there are those regions where they have crossed, but still they have not separated. Let me see whether I will get an example of such a point where they have crossed, yes, but they have not separated clearly. It then becomes, look at this region. You have to avoid. You have to really avoid such regions. A good example is this. Look at a point like this one. See, a region like this, they have separated, yes, they have crossed, yes, but they have not clearly separated. You want to really avoid that. Another good example is this one. Crossed, yes, but separated not clearly. As in, it takes them, it's not a sharp turn. Look for a sharp turn like this one is a sharp turn. Look for those regions that have sharp turns, you know, even if it's on the lower side. Sometimes they cross, but they have not clearly separated. Avoid that. Look for those points that have sharp turns. Avoid this. This is okay. You know, a region like this, see this region, they have crossed and separated, and that, if you look at that market, it looks good if you consider those two indicators. So how do we use the MACD? You look for those regions where the two lines have crossed, they have separated, and they are showing you now the direction. If you look at, let me give you a good example. Again, in the rise and fall, it's one of the markets, and actually it's like all the markets, you really need to be patient about patient with the market. Don't force it, just wait for it. Be patient to wait for it. Okay. And the good thing with the rise and fall is that you can do a lot of analysis, but when it comes to trending, you might realize that you are just using one candle, and with that one candle, everything is okay. For example, if we were to use what? Let me see. You may do a lot of analysis, and at the end of the day, you just want to trend using just one candle, and that one candle is enough for you to make your profits and leave the market. Then as I look for that, then for the MACD, ensure that you want to trend in that region where these bars are either completely red or completely green, not faded. A good example is this. In fact, this is the example I was looking for. Let me show you this line. So for instance, if you look at this market at this region, this is a wonderful example. So let's look at this. First of all, the two lines of the MACD have crossed and they have separated. Can you see they are moving downwards? If you look at the stochastic RSI, again they have crossed, separated, moving down. If you look at these bars that are being formed, these candles that are being formed here, the arrow, the Williams fractal has formed here, meaning that the market is changing from a rise to a fall. And I'm assuming you don't know the candle patterns or the candle types. You are only using indicators. Of course, we are coming to analyzing the market using the candle patterns, which is one of the best way of analyzing the market, of course, but that I'll cover in the next parts. So I don't want to talk about the patterns here, but I just want you to look at the Williams fractals. It has formed here, the green one, meaning that the market is beginning. It shows that the market has changed the character. It is now a fall one. And that is confirmed by the stochastic RSI, it's falling. That is confirmed by the MACD, they have crossed and they are separating nice and easy. And that is also confirmed by the fact that these bars that are being formed here, they are completely red, they are not faded. Avoid trending in those regions where the bars that are being formed are faded. See, like a region like this. if you look at these bars here, they are fainted. So if you enter a trend here, you are likely to encounter some losses. So basically that is what we look for when we are using these indicators. Something else very, very important is that when you want to enter a market, concentrate. And we have said in the rise and fall, you can use one candle, you trend with it, and you are out of the market. Concentrate on looking for those candles that have got very short wicks and a long body. Avoid those candles that have got long wicks, or those candles that are formed in areas with long wicks. That will give you a lot of problems. Let me give you an example of a candle that is formed. See a candle like this one. Look at a candle like this one. The moving average is facing upwards. The stochastic RSI is facing upwards. The MACD is completely green. The lines of the MACD have joined and they are separating and moving upwards. So if you look at this, green of the MACD is moving upwards, even the yellow one is moving upwards. So look at this candle. This one would have been a very good point of entering a rise market, because if you look at this candle, actually it's completely green, and I mean it does not have a long wick. So look for those candles that have got a short wick or even no wick at all. That would be a very good point. Let me give you another example of this. Now at the time when I'm recording this this video, it's about 20 minutes to midnight. That is not a very good time to trend, because if you look at the time left, look, the time left for these candles, the 24-hour candle to close is one. Let me show you that as I explain something there. So if you look at this, the time left, this one has 3 hours and 23 minutes to the close of the candle. That means we can actually get a market. When it is almost closing, avoid entering any trends, because when the candles are about to close, there is always some the market sometimes may range or have some problems. So avoid that. Now something else, now that I'm here, and I hope I'm not giving a lot of so many information, you might want to, once you watch this, go back slowly. You can even take some notes, because we shall be building up from this in the next part. Now if you look at this candle in 24 hours, it's rent, which means this is a fall market. Actually, if you look at this, the Williams fractals has formed, which means this one is a fall market at this point. So when you come to the 2 minutes, you can decide to concentrate on looking for fall entry points for a fall, just a fall. Why? Because in the 24 hours it's a fall, and remember the 24 hours is actually inside 24 hours we have 2 minutes, which means what is happening in the 24 hours is actually what is happening in the 2 minutes. So if in the 24 hours it is a fall market, concentrate on looking for those markets for a fall, for this specific volatility. That will help you to minimize the losses. That does not mean if you get a nice rise market, of course you can trend, and I promise you will get 1 or 2 losses, but still you can trend, especially if you are able to combine this strategy with the others that I'm going to show you in the next parts. But if you are a beginner, try as much as possible. If in the 24 hours it is a fall, go back to 2 minutes and look for a fall. I hope that is clear. Look for candles that are long, short wicks when a candle has a short wick or no wick, let me give you an example of a candle. If you look at a candle like this one, it shows that it has a very short wick, almost no wick. It shows that at this point the momentum of the market was high. So those candles that have no wicks, they just show you that the momentum is high. I hope those are not so many conditions for you to follow. As you practice, imagine this one will become so easy for you. You don't even have to draw these things I'm drawing. With experience, you'll just be looking at the market and you are good to go. But do not force the market. Wait for it. Rise and fall requires that you are so patient. Otherwise, you might make so many losses because if you grow impatient. Let me show you something else. I know there are some people that don't like manual trading, but don't worry, as we continue you will also like it. It's also good. You cannot survive in manual trading if you don't know the candle types and the patterns, but luckily for you we shall cover that also, so that you can either trade using a bot or using just manually. And remember, you have said using a bot you can trade using one candle and you have enough profit and you leave the market. It's possible. Avoid trading when this MACD is fainted. I have said that. Of course, the colors of these bars are the same as the way you know them. Concentrate. If it's a rise, you can see it's green. If it's a fall, it's a red. Avoid such regions. For a market like this, at this point you'd wait until the two lines have started separating, so that you can enter a trend. Now let me mention something on time frame. Why do we insist that you use a shorter time frame? And remember, let's say this is V25, assuming that we got a market in V25, we come set our bot and we have identified a market. Let's say we have identified a market. Of course, this one is not a good place to trade in, but for the purposes of example, assuming that we have identified a market, you have gone to the bot. Now there is this part, written charts. Now that is a very important part, that part that is written charts. Why? Because that's where you come and look for an entry point. I will talk about two major entry points that we use in the rise and fall in the next I think either in part 4 or part 5 I will touch on that. So when you have identified a market and you want now to trend, assuming that our market is good, you now come to the charts, making sure that it is also V25. Make sure that it is also V25. Two minutes. Everything should rhyme. Now if you look at this charts, these candles, actually they are those candles that have got short wicks, others have got long wicks. A candle like this one, a short wick. A candle like this one, short wick. Don't be worried about the names of the candles at this level. If you're a beginner, you will learn about that. I know you have the candlestick Bible, but I will simplify that for you. So once you identify now an entry point, that's where you come and you run your bot. If you have analyzed the market and everything, is okay, you come and you run your bot. So you run your bot after you have done your analysis. You run your bot while at this point looking at these candles, the way they are behaving. So you look at the candles, you realize what is happening in the market, and if you realize that you are encountering a lot of losses, you come and you stop your bot. Then you go back to the market and do an analysis again. But this part, written charts, is a good place to do your analysis. Not analysis, but getting your entry point. After you've done your analysis, you realize that it is maybe a rise market or a fall market. You come back here and you try now to get the entry points. I'll tell you how to get the entry points as we continue. So basically, we've talked about, this is one indicator, the Williams Fractals, the Stochastic Rsi, and the MACD. Now the MACD, unfortunately, sometimes it may be slow to respond. So you need to do a practice with it so that you can see exactly how it behaves. But sometimes it is slow to respond. But luckily, in the next part, I will be introducing another one that responds very fast, and you can rely on it. But MACD is also okay, especially if you want to confirm the market. Remember, we have said you trend when the lines have crossed. A point like this, the lines have crossed and they have separated. The bars are either pure green or pure red, not fainted. That's the time you enter your trend. The stochastic RSI is showing a rise, and the moving average is showing a rise. And if you get a good candle like this, you can use it and trend. In the next part, I'll talk about a few things. I'll talk about how to check. When do we use one tick? When do we use two ticks? When do you use three ticks? Then I'll introduce another another indicator, and then talk about some other things. So thank you for watching. I know I might have said many things, especially if you're a beginner, but if you have been trending rise and fall, this could sound as so easy, but we are building upon it soon. So stay tuned, subscribe to this channel, you can share with your friends, and see you in the next part. In case you want to comment, use the comment section, or if you want to write to us directly, in the description I will leave the email address. Thank you and see you.